Hey guys, this one's going to be a subscribers only one, right? This is based on the first question that I've just had in the ways to learn um, post that I've just created. Now, in terms of confirmation, right, it's not a simple answer because this depends on loads of different things, and when I say loads of different things, it's kind of almost personal to you. It's personal to the setup. It's almost unique every time, right? But you get to understand certain traits and character traits of the instrument that you're trading. So there's no kind of straight line answer. It's not a you do this and you do that and it's done. It's just how you see confirmation in the first place, right? So if I get rid of some of these a second. Now I've talked a lot of the time, right? And I know myself and Paul keep having this conversation in terms of looking at a certain move, right? And I'll just draw something just to show you a second. So, for example, right, let's just say we've got this level. Now, it almost doesn't matter what the level is. This could be, a master pattern. This could be a fair value gap. This could be, supply. This could be support. This could be literally anything in the grand scheme of things, right? It's just the general sense. So, let's just assume that we're watching this price come down like this, right? Now, at this particular stage, I'm going to be looking at this and saying, well, let's assume that we want to take this position long, right? And we say, oh, well, if it gets to this level, it's definitely going to bring up a stop loss like this. I want to take this up to this particular high, just as an example. The issue being is if you were to zoom down into the time frames and the next move down comes quite fast, okay? Now, the chances are this could fly all the way through, which means you've entered on a position on the assumption that we're actually going up. So for me, one of the areas that I would look at in terms of confirmation is I'm just going to use a 4 hour time frame, right? And I'm going to pretend that I dropped on a time frame because I've got this on the drawing. Now, the general sense is that we've had this big move down. We've come into an area of interest, and like I said, the area of interest is to you, that's your strategy, your style, whatever that might be. You've decided that long is what you're looking for more than short. Okay. Now, at this particular point, what you have to understand, right, and this is where it gets a little bit more complicated. What you actually have to understand is what's actually going on in that big picture, right? So if we think in, let's just say, Wyckoff terms, we're going to have a reaction. So this might have been the first reaction move. We're going to have some kind of AR. We're going to come back down again, and we might not breach this level, right? Or we might just breach the level. Then we come up and we have some kind of sign of strength. And then ultimately what we then do is come back down for a spring type event. Now, if you think of this logically, what we've actually gone and done is we've given logic and rationale for a move up. And most of the time, people who don't take confirmation will take this move. And they instantly get stopped out. Composite man knows that this level is a level, right? You've identified it. How do you think, professional traders with a lot more experience than you are actually seeing this as a level, right? And therefore, if you've taken this move there, right, and this is why I said yesterday for me on the Euro move, I took that move inside a zone, an area of interest, and I took it for a small ride. And if you come back to the musing channel, I actually had the bot that I've got when I put the alerts on the chart. I've actually got this one, thanks kindly for that. I was looking for the move up, right? And I'll explain this move now in a second. Right? But basically this was me using my experience in terms of taking the first move, right? So when it comes to confirmation, did we have that additional sweep? Well, no. Okay. So that's one aspect of confirmation. So if I was to explain how I would deal with this, the way that I'd be dealing with this is not thinking, hey, there's a level there. I'm thinking, how did we approach that level? What happened at that level? What happened around that level? What happens when I drop down the time frame at this level? Right? These are the kinds of things that I'm kind of curious about. Now, we've also talked about things like change of character, a market structure shift, right? Now, a lot of these things are just the same solution, right? Badged up slightly different, right? We talk about fair value gaps. That's no different than an imbalance, right? It's just a different term, a different word for the same thing. Okay. So if we were to take this trade based on the single level, one of the reasons that I like a zone is how do we interact in the zone, close to the zone, just before the zone, during the zone, right? And therefore, it's not a level where I've just put an entry and I've gone. I'm waiting for something to tell me what's actually going on, right? So let's now pretend that I'm on this 4 hour time frame. We're watching this move come down. We come into an area where it's interesting to me. Now, at this particular point, I can go from a 4 hour to say a 1 hour. Now, on that 1 hour, what I'm going to see is the knee-jerk reaction, and I'm going to see a pullback. Now, at this particular point, I could say, well, actually, that pullback there doesn't sweep out, which means I can take my first move. We get the breaker structure, right? Now, I've taken a risky move here, or I've taken a confirmation move there, okay? But on that 1 hour time frame, we've moved up, but we haven't seen a pullback. So at this particular point, is this a good trade there? It's an okay trade if you know that you're looking for the smaller time frame. But if you're looking for the bigger time frame, no, the move isn't there. Because all we've done is come up, gone back into the liquidity, gone through to make the first move in that market structure shift, the break of structure in terms of what we're seeing right now. And therefore, the actual move is there. Okay? Because now we've actually had the full change of dynamic inside that move. Okay? Now, in this particular example, perhaps we didn't get a sweep, but the fact that we've seen this instead of a sweep means that we're quite comfortable to take this move. We could then wait for another pullback again and take it again, right? And so on, so on, so on. But the general idea, right, is this is the type of confirmation that you're looking for in any type of play or scenario, okay? So as I said right at the start of the video, there's no one answer. There's not something that you can kind of copy and paste this. You might find that Aussie has a certain character trait where the pullbacks are only 50%, not 105%. And you might find that Euro, and this is one of the reasons I trade Euro on the smaller time frame, I tend to find what happens with Euros, going back to my Euro example, I'll just find this on the chart, is that Euro does something pretty interesting, right? And part of the reason that this is pretty interesting, I kind of want to tell you this, and I almost don't want to tell you this because you almost don't want to get lost in terms of how this tends to happen, right? Why this happens. So, as I've put in terms of why this move up, right? Now, if you were watching from a visitor's point of view, which I know this video isn't about, this is for the members only. If you're watching this from the visitors and you said, oh, well, you posted this is going long and it dropped down, you really have to understand why and where that confirmation was, right? This 15-minute liquidity was from last week. This 30-minute liquidity was from last week, right? And I put this out into the Musing channel. And the general idea is, I've taken 3 trades inside of these moves because I'm looking at this on a smaller time frame, right? So in terms of yesterday's move, let me try to find where we were yesterday's move, right? What I was looking for, and this is why I'm saying I kind of want to tell you this and I kind of don't, right? Is that you can't take this for granted. This is a lot of information, right? If you've kind of never seen this before. Euro is very prone to being manipulated, right? And in a pretty good sense, right? Now, the reason for that is when you move beyond a certain area or a certain level, majority of rookie traders, they place their stop losses 5 pips, 10 pips, 15 pips, 20 pips, right, away from the key level. So what you tend to find is I had this area drawn in terms of liquidity, right? And I'll obviously come back down smaller time frame. So the first particular move was as I saw the move coming away from this area and dropping down, right? There's my area of interest. Okay. Now, this is on a small time frame. Let's just say this is a 15-minute time. I'm not going to change swap back and forth. I'm just going to explain what I receive and why, right? When we have this first move away, the second move is only sweeping a move that we hadn't swept, which means there was liquidity underneath it. So the reason that I got out at the 59 level, right, which is what this was 319. The reason that I got out at the 59 level, right, was I wanted prior to this liquidity, right? So as we kind of come up, I took a trade, the move in a smaller time frame basically done this. I took a trade and I was in and out in a very short space of time, right? Now, that's me being, cocky. That's me being, I suppose, just using the experience to my advantage, right? And I wouldn't recommend that you do that, especially this is only the first time you're seeing this, right? Now, when you understand what's actually happened in this bigger time frame, we've actually had a move down and a move that says, hey, I'm ready to go up, right? Because this is unlike anything we've seen in these prior moves, right? This is almost that knee-jerk reaction, right? So in some regard, treat this almost like an AR. But if we have an AR type move, what are we going to see? Well, the next move down tends to take out the stop losses before giving us a sign of strength. Now, this sign of strength is completely different than anything we've seen over here. And therefore, what am I expecting next? Well, I'd like to see the sign of strength followed by a pullback, right? Followed by a larger move. And if I'm looking to zoom out and say, hey, what's the stochastic doing on, let's say, a bigger time frame? So I'm on the 1 hour, I'm coming to the daily, which technically is 2 time frames up. I would expect this to be relatively low, giving me room to grow. And there we are, room to grow, right? Followed by that sign of strength. So at that particular point, my confirmation is, okay, we've now had the sign of strength. I can drop back down into the smaller time frames. And I can say to myself, I don't need to rush into this trade. We've swept prior liquidity. We've now had this sign of strength. What are we likely to do next? We're likely to come back in to a fair value gap, to an order block, to a buy before you sell before you buy type of area, an auction area. Right? Once we get into that auction area, I can then start looking for one of two things. Entries in that position and take the high risk, high reward type setup, or I wait for the next breaker structure, right? So if I was to draw that out, get rid of this in a second, right? If I was to draw that out on a smaller time frame, what I would like to see on a smaller time frame is an A, a B, and a C, right? Now I could run fib extensions and say, oh, this could bring me back to, let's just say this block in here, and I got a zone rather than a level, and I could put a position there to take that long. That's the higher risk situation. However, if I know that my daily time frame, and I'm operating now on a 15-minute to a 1 hour time frame, if I know my daily bias is up, all I'm looking for is this move to happen. Right? Let's just assume that this becomes the top. Once we've had this move, I want to be entering, not right down there. I'd rather enter on a Wyckoff type situation where I take the long as we clear through here with a stop loss below wherever that low becomes, and a take profit in a much bigger sense, right? And obviously I can drag that up looking on the daily. My targets are not relevant at the moment. The general idea is that's how I'm looking for confirmation, right? Now, obviously, there's other confirmation, tools, techniques. There's other things you could say, well, what's the COT doing? If we're looking at a bigger time frame, what's the weekly looking like in terms of a bias, which I've obviously just covered. or is there a stochastic that's pointing up? Is there a moving average cross if you're into all that kind of stuff? There's loads of different ways, right? So it's not just it's one way or the other. It just comes down to what really suits your strategy, right? Now, one of the things I've been doing a lot of recently on Euro is I've been taking these little trades in terms of the liquidity grabs, right? And then, whether we get an Asian session or whether we get just this kind of bit of news or something, probably this now today, bit of news. What I've been doing is I've been taking these moves with a bigger bias in mind, right? So I knew we got a daily move coming. I know that my situation is to push this to the upside. So therefore, the move down swept the liquidity on a small time frame and reacted. We swept the liquidity again and reacted. Now, the beauty of understanding the character traits of Euro for me is that on these small time frames, you have to understand who's operating. And the who is operating, basically retail traders. So when retail traders jump in without confirmation, it's the first thing you're going to expect, the sweep of liquidity of those early bird entries. All right. So anyway, I hope this makes a bit of sense. Obviously, any more questions, feel free. And yeah, I'll see you on the next stream. Just for watching, guys.